by the insurer. Between the time that an insurance application is signed and the policy is delivered, an underwriter reviews the application to determine whether the insurance applicant will be issued a policy and at what premium. In reviewing an application and its risks, the underwriter decides whether the policy will be issued as a standard risk policy, issued as a preferred risk, above standard, policy, issued as a rated, substandard, policy, issued with a different amount of coverage, declined. Sources of underwriting information. Underwriters rely on many sources of information in deciding whether to accept or decline a risk, including the application, the agent's report, an attending physician's statement, APS, an inspection, credit, or consumer report, the MIB report, a medical exam, including an electrocardiogram, or EKG, treadmill test, or other examination by a physician, Department of Motor Vehicle, DMV, report, hazardous activity questionnaires, concerning activities related to aviation, scuba diving, auto racing, etc. Application. The application is the underwriter's primary source of information. It furnishes crucial information about the applicant and the insured. Requested insurance coverage. Insured's health. The signed application becomes part of the contract between the insurer and the policy owner. Agent/producer report. An important attachment to the application is the agent's report, or producer's report. Written by the agent, it includes information about the applicant that would be useful to the underwriter, for example, the applicant's personal character, habits, and/or other insurance policies owned. If the new policy is to replace an existing policy, the agent must also provide information about the existing policy. Attending physician's statement. After reviewing the application and agent's report, the underwriter may want more information about a past health issue mentioned on the application. In this case, a request for an attending physician's statement, APS, might be made. The APS is completed by the applicant's doctor. Investigative consumer reports. Underwriters who want more personal information about the applicant's lifestyle and finances may request any of several types of investigative consumer reports. For information not available in public records, the underwriter may order an inspection report, also called a consumer report. Used to help evaluate an applicant's lifestyle and personal habits, these reports are prepared by qualified inspectors who interview friends, neighbors, co-workers, and others known to the applicant. They are most commonly requested for applicants seeking very high amounts of life insurance. When the applicant's finances are a concern, a credit report may be ordered. Produced by credit reporting agencies, CRAs, a credit report assesses a consumer's creditworthiness. Fair Credit Reporting Act. To comply with the Fair Credit Reporting Act, FCRA, all information obtained by insurers through consumer and credit reports must be held in strict confidence. The FCRA has procedures that credit reporting agencies, CRAs, must follow to ensure confidentiality, accuracy of reporting, and proper use of the information. Businesses, including insurers, that seek a credit report must notify the applicant about the request, usually within 3 days. Disclose to the applicant what the report will cover. Notify the applicant that he or she may request a credit report summary. Provide a credit report summary within 5 days of its being requested by the applicant. If an insurance company makes an adverse underwriting decision based on information obtained in a credit report, it must notify the applicant of that fact. It is not required to provide the applicant with a copy of the credit report but is required to provide the CRA's contact information. The applicant can request the contents of the report directly from the CRA, not the insurance company, and may contest any inaccurate information in the report. MIB. Another source of underwriting information is the MIB Group Incorporated. MIB, a cooperative data exchange formed by North American life and health insurance companies. The MIB maintains a database of confidential medical information on applicants for life and health insurance who have been underwritten by a member insurer and found to have an identified medical impairment. Its purpose is to reduce adverse selection by identifying applicants who have previously applied for insurance and may shop around for insurance without fully disclosing pre-existing medical conditions. Member insurers are obligated to report all impairments to the MIB, whether the insurer accepts, rates, or declines the risk. To help protect the confidential nature of the information collected by MIB, impairments are identified as numeric codes, with no personal details. Member insurers do not report their underwriting decision to the MIB. Furthermore, an insurer cannot decline or rate an application based solely on the contents of the MIB report. Applicants must grant approval for insurers to access and use MIB information pertaining to them, something that is requested by the insurer in the application. Medical exams and lab tests. Underwriters may request additional medical exams and lab tests depending on the type or amount of the proposed insurance, the age of the applicant, questions raised in the health section of the application. Insurance companies pay for all medical exams or lab tests that they request. HIV testing. Insurers are permitted to test for the human immunodeficiency virus, HIV. Most states regulate the way in which insurers may use the information obtained with an HIV test. The state law section of this course will explain your state's requirements if they are covered on your state insurance license exam. Genetic testing. The Genetic Information Non-Discrimination Act, GINA, prohibits insurance companies and employers from discriminating based on information derived through genetic tests. Privacy and the Gramm-Leach-Bliley Act. The Gramm-Leach-Bliley, GLB, Act prevents a financial institution from disclosing a consumer's non-public personal information to an unaffiliated third party unless it gives consumers prior notice and a chance to refuse disclosure. It requires this notice at the start of any business dealings and then annually. To ensure that privacy policies and practices are followed, a company must communicate them to employees and train staff to follow them, particularly employees who collect and have access to personal information. Selection criteria and unfair discrimination. When reviewing applications and applying underwriting standards, insurers are expected to base their selection criteria on statistical data. State laws prohibit discrimination against any individual based on race, creed, religion, gender, sexual orientation, or physical defects, including blindness, when determining eligibility, setting coverage limits, setting deductibles or exclusions, settling claims. Key point: insurance company underwriters can discriminate based on relevant risk factors such as the applicant's health, personal habits, job responsibilities, and so forth. They cannot discriminate on irrelevant factors such as race, religion, ethnicity, and sexual orientation. Gender can be a relevant underwriting factor only where it directly impacts the risk. For example, statistics show that women generally live longer than men. As a result, life insurance premiums are usually slightly less for women than for men of the same age, all other factors being equal. Risk classifications. The underwriter evaluates all information received about the proposed insured and decides whether to accept the risk. At the end of the underwriting process, applicants are assigned a risk classification that determines if they are accepted at standard, or even better than standard preferred, premium rates, assigned to one of the various substandard rating classifications, declined. Historically, more than 90% of applications for life insurance receive standard or preferred issue. Standard risk classification. An applicant with a standard risk rating is one who meets the insurer's guidelines as an acceptable risk. A policy in this category does not require special conditions or higher rates based on the proposed insured's health, habits, job, or family history. Applicants rated as a standard risk pay standard premium rates. Preferred risk classification. Applicants who represent an especially low risk may be classified as a preferred risk. Applicants may qualify as a preferred risk if they enjoy excellent health, do not have risky habits, work in a low-risk job, and have no family history of heart disease or cancer. Applicants with a preferred risk rating usually pay lower than standard premiums. Substandard risk classification. Applicants who represent a higher than average risk are classified as a substandard risk. An applicant can receive this rating for several reasons, including poor health, bad habits, a dangerous job, or a high number of early major illnesses in the family. Applicants with a substandard risk rating pay higher than standard premiums. Uninsurable, declined, risk classification. Applicants with a very high substandard risk rating are declined coverage altogether. Only about 2% of life insurance applicants are rejected as uninsurable. To be as fair as possible to all applicants, an underwriter's decision to decline an applicant or to apply a substandard rating is usually reviewed by another underwriter. Underwriting methods. Underwriters generally use either the judgment method or the numerical method in conducting the underwriting process. The judgment method was the basis of the risk classification process in the early years of the life insurance industry. Under this underwriting method, clerks reviewed all routine applications. Based on the underwriter's judgment, the risk was approved at standard rates, declined, or rated. The judgment method works best in very simple underwriting cases. It is much less effective in complicated cases. Because of this flaw, insurers developed a numerical rating system of underwriting risks, which is used by most insurers today. Under the numerical rating system, weights are assigned to selected factors that have the greatest impact on the risk. Numerical credits are assigned for favorable factors and numerical debits are assigned for unfavorable factors. Credits are subtracted from the debits, and the result, which may be a negative number, if credits exceed debits, is added to 100. The higher the number, the greater the risk. For your review. Underwriting information comes from numerous sources, including the application, agent's report, medical exams, and attending physician's statement, APS. The MIB helps to reduce adverse selection by identifying applicants who have previously applied for insurance and may shop around for insurance without fully disclosing pre-existing medical conditions. Risks are classified as standard, preferred, substandard, or rated, and uninsurable, or declined. The numerical rating system is the most common underwriting method used today. Please pause the audio and watch the video. You can restart the...
When it comes to insurance company functions, underwriting is one that is both easy to understand and complicated to master. It's easy to understand the basic role of the underwriter, and that is to assess an application to determine, is this an insurable risk? Am I going to stake my company's money on this application? And if I am willing to accept that risk, do I accept it as a standard risk, or do I have to do something to the policy to reflect the fact that this applicant represents a higher than average risk? That's pretty easy to understand. It gets complicated when you get down to the details and try to understand what it is that the underwriter has to go through. The various sources of underwriting information are explained in the lesson, and they include the application, which is the primary source of underwriting information, and a variety of other sources, the Medical Information Bureau, attending physician statements, credit reports. They're all sources of information that the underwriter pulls together to get a complete picture of the applicant. Now, there's a couple of things that we want to make sure we fully understand before we move on here. Number one, underwriters are your friend. Now, I know that sounds funny, but I know from experience that a lot of times producers get this attitude that underwriters are out to stop them from writing business. Underwriters do not want to stop business. And in fact, they have as much of an interest in seeing new business come into the company as you do. So they have a very strong incentive to help you place that business. And then on a personal note, I also want to point out underwriters are people. They're people that have feelings. And if you want to get along well with your underwriter, please keep that in mind. Treat them with respect, answer their questions when they ask them, make sure you provide complete answers, and you'll find that a friendly underwriter is the best thing you have going for you in your career.
Okay, so here is the questions for this chapter. Who completes an attending physician's statement? The proposed insured doctor who is familiar with the medical condition being treated. I am guessing. What happens to a signed application after the apply for policy is issued? It becomes part of the contract between the insurer and the policy owner. During the underwriting process, a life insurance company may request a medical exam based on the following criteria, except the applicant's race. A life insurance applicant whose preferred risk can expect to pay a premium that is best described as generally higher, I would think. All right, let's see how we did. 75%, so I got one of them wrong, which is the lower. Generally higher premiums for a standard risk. Really? Oh, okay. I was reading this backwards. Okay, yeah, that makes sense. Okay, cannot base any tests on race, religion, gender, or sexual orientation. The signed applicant becomes part of the contract between the insurer and the policy owner, and the proposed insured doctor is familiar with how the medical condition is being treated, writes the attending physician statement for life insurance. All right, that's it on this chapter. The next one will be type of insurance policies.